on this advanced training. I really want to hang tight on this because I want some of you guys to start pulling in these statements and kind of getting to the next level with these things. So the simplest part is I'm getting ready to start throwing some people on our call. I'm gonna have Sean Reggiano on our call either next week or the week following up. That's if you guys don't know who that is the head of AMS. So that's the person you go to if you need questions on anything with advanced marketing. So we went over IULs, we went over annuities. The next thing, as I promised, I want to start going to these infinite banking strategies. So I literally just had a client leave my office where we're looking to dump in a little over 100,000. So the simplest way to look at it is we're going to do essentially the same thing the bank does, right? And what that is when you take your $50,000, $20,000, $5,000, or $500 and you put it into your savings account or your checkings account, the bank is then going to have an online banking system, or you can check your statement and you see your money there. But your money is not actually there. They're taking all your money and everybody else's money that's in the bank and they're investing it back out to everybody else. So they're giving me my car note. They're giving Emmanuel his home mortgage loan. They're giving this person his personal loan. They're giving this person, this home line of equity loan. And then they're charging 8%, 18%, 20%, 5%, 15%. So essentially what you're going to do is you're going to become the bank. What he's going to do is he's going to take his 100,000 that's sitting in his bank account. He's going to take that and he's going to put that directly into this insurance policy. And Abdul, I've seen you jump on. So I'm actually kind of use you as an example because I know you've been writing a lot of these cases lately. But typically he's taking that 100,000, he's going to put it into his insurance policy. He's going to then have $1 million of life insurance. So if he dies tomorrow, he has 1 million. He's going to be able to pull out 90% of the money that he puts in. You heard what I said. So he puts 100,000 into the policy, he's going to be able to pull out 90,000 within 30 days, right? That 90,000 that he pulled out, he can take that and then start using it as cash the same way he would have used his bank account. The account is still going to stay 100,000 because he's borrowing the 90,000 from the insurance company. So his 100,000 is still sitting in the policy, still gaining compound interest, right? And then he's going to have a non-structured repayment to his loan. What that means is he doesn't have to pay tomorrow, the next day. He can start paying it a year from now, 2 years from now. Now, we'll have a fixed interest rate on there that he has to pay back, which will be structured out. I'll say it won't be no more than 5%. Here's the great thing. The compounded interest that's growing inside the policy should outweigh, if not pass, the interest that he's getting on the loan. So if he takes 2 years to take this 90 out and invest into real estate or pay his car off and then decide to pay back into the policy, he's going to gain compounded interest on the 100,000 that's already there. And then as he replaces on the loan, it's just going to go away, right? So for example, after like 10 years of this type of policy, you're looking at sometimes even a double up of what you put in. So you might have put in 100,000, or you might schedule to put in 150,000 over the next 10 years, and you might get 75,000 to 100,000 in your return, plus your $1 million worth of coverage, plus the 90,000 or the 100,000 that you borrowed out and spent. So it's a great concept. It's a great concept, and it doesn't have to be done at 100,000. Abdul, I'm gonna have you unmute, and I'm gonna have you talk a little bit about the one you did for 25,000. How did you structure that, and what was the scenario on that?
All right, can you hear me?
I can hear you.
All right, so for some of the one I just did for the 25,000.
Yeah.
So he basically got a salary bonus from his job, and what we did was we took that whole bonus of the 25,000, we dumped it inside to his whole life policy. Like you mentioned, they gave interest for then he also, once you dump it in, but it's still life insurance, so he still has a monthly premium to it, which was about $300 a month that he's paying into the insurance. He's able to take out 90% of that right away, like right away. Like as soon as the policy is approved, he's able to take that money out. To give y'all an example, because I have one of these policies as well. What I did was I had like $4,000. I started the policy with $4,000. As soon as I got approved, the next day I took the $4,000 out. It typically hits your account when you take it out in like 3 to 5 business days, like an online savings. When it hit my account, I went out and I bought a car. Right? With that, it's like you said, it's unstructured loans. I didn't start paying it back on it until like about 6 months later. And fast forward 2 years, that $4,000 actually turned into $10,000 in about 2 years. So it was like really, it happens really quick. That happened really quick. Like my money doubled on it. So that's like an example of how at a smaller scale with me.
I like that. So yeah, no, thanks for that story too, Ed. So that just shows it on a smaller scale. He put 4,000 in, and in 2 years, it accumulated 10,000. So that's more than 100% return on his money. And by the way, he still spent the 4,000 to buy his car.
Exactly.
So it's like having the best of both worlds. How much coverage did you have of life insurance initially?
Initially, it started out as 200,000, and now it's at about 350,000. And my premium stayed the same his whole life. So my premiums never increased, but my death benefit rose about 150,000 on top of that. In between those years.
Wow. So that's just it. That's it on a smaller scale. So just to let you guys know that you don't got to look for people that's going to dump in 100,000 to be able to sell these type of policies. People can literally dump in 4,000, take that 4,000 back out and spend it like they were normally spend it, start making payments on the loan structurally to what's comfortable for them, and still gain the interest on the 4,000 as if they never used it. And a couple of years later, 4,000 turned to 10. Imagine if it's 10,000 that turned into 25,000. Imagine if it's 2,000 that turned into 8. It don't really matter. The numbers work the same. It's just understanding the scenario and understanding the significance of it. The best part about this is the liquidity, that the person still have access to the money. Most people are afraid to invest because when you invest, you lose the money. It's like, all right, I invest this, but I can't cash out on my investment until it's time to liquidate. The best thing about this is you can invest and still have 190% access to your money while it still grow as if you never touched it. Oh, and by the way, not to mention the bonus of the life insurance. He had 200,000 in life insurance. So as his cash value grew, his life insurance grew. So now he has 350 in life insurance, 10,000 in. All from a $4,000 investment that he still got to spend and use. Why isn't everybody on this call, everybody with their insurance license, don't have one of these policies and not selling these policies? Because this literally should be the easiest concept to do, right? And a lot of times the carriers, and Ab, I'm gonna have you talk. A lot of times the carriers will literally hold your hand and walk you through the policy. So Ab, talk a little bit about how somebody who doesn't know anything, how if they find the opportunity, how easy it is for them to execute it.
It's very easy. So all you do is you call their insurance carriers, which would be Foster's or National Life Group, will be the best at it because those are the mutual dividend paying whole life insurance companies that we have. We're going to make sure the companies pay dividends. That's the only way that will work. But once we call them, you'll give them the age, you'll give them the amount they want to dump in and the amount that they can afford for the monthly premiums. And they will draw up the illustration and send it to you. It's really that simple. It's really that simple for that. What else want to add on top of that? Oh, to find like smaller cases, you can think about people who have money in savings accounts, people who have like a couple thousand in savings accounts, they earning less than 1% in that savings account. And even if they even if they earn that less than 1%, you have to pay taxes on the growth inside savings accounts and inside the money markets. When you put it into the life insurance, you don't have to pay no taxes when you're taking it out, and your family doesn't have to pay taxes when the death benefit is being made as well. So that's where you can find them. Some people that has that. Some entrepreneurs, some people that might be self-employed like ourselves. Like for instance, you said all of us should have one. All of us are 1099. All of us got to pay taxes at the end of the year. Where are you keeping that money for your taxes? Where are you saving it at? Are you keeping that in the savings account? You really could keep it into a life insurance policy. So as far as though at the end of the year, when you pay taxes, you can borrow from yourself and then pay it back each year, and you're going to end up, as you pay back, you're going to have more than what you put in every year to make that account work effective as well. So like different things like that. If you look at somebody that's about to buy a house before they do that down payment for the home, put that down payment into the life insurance, kind of how I did with my car, the same way. So everyday people can have these types of policies. You just gotta ask the right questions and find an opportunity.
Pretty much the way you're looking at it is anything that you're going to be paying cash towards, anything that you're going to be using your bank account for, you should use this for. Whether it's saving for a house, whether it's buying a car, pay the down payment on a car, wherever it is that you're going to use your regular check-ins and savings account for, why not use this with yields of 4 to 5 to 6% compounded interest, which we already shows that in 2 years, you're more than doubling what you put in, right? And that's just on a simple scale. But just keeping it really simple, guys. We all should be selling these. We all should have these. The conversation is simple. The conversation is really, really simple. Just like Ab said, if y'all need illustrations, what I'm gonna start doing is I'm going to send out some illustrations and put it on what's our new platform? Ab, what's the platform we have, Ab?
On the Gumroad.
On the website you created.
Yep. We
On the website.
On the website.
Okay.
Yeah.
Not Telegram. It's a website that we have for new agents.
Yeah, that's on Gumroad. Yes. It's called Gumroad. Yep. That's on Gumroad. Also, like the piggyback on what you said, Kyrie. Like we pay interest on everything. We pay interest when we buy something. Either when we buy something with cash, we're paying interest, or we're losing interest. So when we pay for cash, we're losing the interest that we could be gaining on that money inside our bank accounts. And when we buy something and don't lose cash, we got to pay interest before that loan. So if you're gonna pay interest, why not have that come back to yourself instead of someone else? So that's why it's smart to put the money into the policy.
So Ed, I want to open it up for questions for anybody on this call that's new, anybody that kind of want to have a question towards this. I want to get some of the questions out now, because within the next week or two, we're going to have Sean Reggiano on here, and he's going to be talking about the processes and the ins and outs of really executing these type of policies. So any questions, what I want you to do is I want you to either raise your hand, put the hand out there, or comment in the chat. I'm sure we got some questions. They can unmute themselves, right?
Hey, Kareem, real quick. I'm sorry, man.
Who's that?
Sergio. Hey, I know this is something that I was interested in, like showing my landlord. He's on vacation right now, but you know what I mean? Like he's a landlord, so he got different properties. I'm pretty sure he's gonna be interested in that. So,
absolutely.
So a good approach for me is like to give him an example. Hey, do you have like a saving account where you keep your money, right? So would be great for you to like just keep that same amount of money and just duplicate it in a couple of years. Can I say that? Just real quick, like just to be.
So the easiest pitch you should do is, and here's why we're going to give you the illustrations on our website. So that way you can kind of show the visual and kind of let the visual talk for itself. You know what I mean? When you show this visual and they're able to see that, hey, Mr. Landlord, this is just a basic policy of someone putting 10,000 into it. Here's another one where basically someone putting 100,000 in. Doesn't matter. Any of the illustrations are going to work. It's just a concept. Hey, Joey put 100,000 into this policy. Immediately, he was able to pull out 90,000 out of this policy. He was able to spend that on these investments over here. It's perfect for real estate, right? Because he can take that 100,000 that he was going to spend on buying another property or fixing up another property. He'll take that 100,000, put it in here first, then borrow the 90 out or the 100 out, and then use that 100 to kind of make his plays on fixing the properties or buying new properties. And then he's going to also have $1 million worth of life insurance, right? And then guess what? Once he makes his investment in 2 years or a year or 30 or 6 months, usually when anybody invests into real estate, they got a plan on when they want their ROI, which is their return on the investment. So once he gets his return on his investment, he doubles it or makes whatever, he takes that back to pay the insurance policy off. The interest that he made on the policy was already building as if he never took the money out. And then he take that money that he made and maybe he start another policy that's earmarked strictly to pay off the mortgages off all his other house or pay off all his other debt, right? Or he constantly uses this money over and over again like a HELOC, right? Because that's what most investors do. They buy the house. If they're not going to sell it and they're going to rent it out, they usually put a HELOC on the house, or they usually get an equity line on the house where they can recoup all their cash and capital to reinvest again, while the house is generating income and then it pays that loan. Why not do that same thing with his own policy where he gains the 10% interest, the 15% interest? It gets crazy. It gets crazy. So the simplest way is just to show him that policy where he can have $1 million death benefit, put 100,000 in there, let it grow interest, and still use the 100,000. 3 things in one. You're able to use the money the same way you would use it in a bank account. You're able to store it away and let it compound interest. And then you're also left with a huge death benefit that grows. It's a no-brainer. Your bank account's not going to do that. Your savings account's not going to do that.
Definitely not, man. I really appreciate that. I know he's gonna like that, man. He likes money. I mean, everybody likes money. You know what I mean?
He's going to love it. And guess what? He's going to tell his buddies and his buddies and his buddies. You know, every case that I'm doing like that now on is just from referrals. I do one, I do another, and that's all it really is because the word spreads, right? So while you're working on this one with someone who's want to dump 4,000 in, now you're working with somebody that's dumping 100,000 in, right? And yeah, they're all fully underwritten, so you do have to do blood and urine. But would you wait instead of getting paid the next day like America will pay you? Would you wait 2 to 3 weeks to get paid, and it's a $10,000, $15,000, $20,000 commission?
Oh, hell yeah.
One lump sum, boom. So I mean, the best thing about these things is just being able to mention it. Just understand those 3 things and identifying the right people, just like you did. He's an excellent candidate. Everybody's a candidate, but there's some people that's going to jump all over it because they're spending money anyway. And they'll understand that concept. So yeah, that was a great question, Serge. Any other questions, Serge, or anybody else? Any other questions?
I just want to mention that Walt Disney did this when he bought all of that land in Florida. When he bought Disney World in Florida, he actually utilized his life insurance cash value to pay for Disney World because no one would give him a loan for it. So he borrowed it from himself. John McCain, he funded his presidential campaign when he was running for president. He funded it with life insurance cash value from a banking policy as well. So this has been around for ages. It's just that only the wealthy people knew about it. Like people like us did not.
And guess what? Your banks that you put your money into every single day, they do it too. Bank of America invested $22.5 billion into the life insurance policy just like that. And if you look up, it's all public information, whether you got Chase, I think Chase did 19.3, and just the list goes on and on. So if your very banks that you're entrusting your money is doing it, and it's good enough for them, why not you? By the way, these companies been around for hundreds of years. You know what I mean? So they're more stable than your bank. They have more capital than the actual bank you trust to put your money in. So that's just a food for thought. But guys, I'm not going to beat a dead horse. I see Kenneth. You got your hand up. Go ahead, talk, bro.
Yeah, what's up, man?
What's up, bro?
All right. So yeah, I understand. You kind of started to answer the question with the last question. But I understand that we can have more than one policies. I don't know what's the maximum and how often you can do new policies.
Good question. So each company kind of got the maximum. I know we just talked about this. Mutual of Omaha, they only allow you to put up to $1 million in to that policy, and it's $200,000 a year. Now that doesn't mean you can't have, if you're trying to put $1 million in that policy or $500,000 in that policy, you can't have a policy on yourself, your child, and your wife, right? And that also doesn't mean that you have to go with that only company. You can do 200,000 dump in with Foresters and do 500 with NLG. And then we got another one, Lafayette Life. You know what I mean? So you can kind of, it's endless. When there's a way, there's a will. Let's put it that way.
All right, I said thank you.
I looked at one with Lafayette where my cousin is going to dump in 1.1 million in it, and he's going to get $22 million worth of life insurance, and he's going to be able to borrow out 90% immediately. So, I mean, it's flexible. When there's a way, and when there's a will, there's a way.
Okay.
Any other questions? You could just unmute. I see.
Real quick, I'm sorry, Kyrie, real quick. So let's say he put like 20,000 on one account, right? Can he double it later? Like can he put like 10,000 more later on the same account, or he's gotta do another one just in case?
No, yeah. You can schedule it. You can schedule it. So basically, when you schedule it, the simple way it works is you can't go over what we schedule because it's called a MEC. And whenever it MECs, that's when you gotta start paying taxes and things like that. I would never let you write a MEC policy, and the insurance company is pretty much not going to let you write a MEC policy. So for example, here's an example. We set up another one where they're going to put $1 million in over this policy, but over the next couple of years. So it's going to be 300,000 this year, 300,000 the next year, 300,000 next year, 100,000 the fourth year. Along the way, he's going to borrow out. Once that policy hit $1 million, you can't put any more money into it. It's done. Because then it'll MEC. And the reason they do this is because of the cost of insurance, and they also do it because it's a thin line between working these policies and money laundering. And I won't go too deep into that concept, but just know back in the day, the mob used to stuff a crap load of money into these policies because these policies are shielded from the government. You don't pay no taxes on it. If someone sues you, they can't touch it because all the money is deemed as a legacy. So there's a lot of benefits to having this policy. So they do got to kind of regulate it. But guess what? Doesn't mean if you only can put an M in this insurance policy, you can't go get another $1 million from Lafayette and dump it in there. And then get another $1 million in National Life and dump it in there, right? And then put $3 million on your wife on it, so you can have $10 million sitting around in all these policies. And guess what? If your financials line up right, some of these companies will allow you to dump 10 million in, and they just want to track your financials to make sure that the money didn't just come off from off seas or in some illegal way. Did I answer that question, Serge?
Definitely.
Okay, I see Manuel, you got your hand up. Talk to me, bro.
Yes, sir. Yes, sir. How you doing?
I'm pretty good, man.
Hey, real quick, I'm not gonna take much of your time. I know you're pretty busy, but
I'm here for you.
Awesome. On Friday, I have a potential client, right? A sit down, but now he wants to cover $800,000 of his loan amount, right?
Sure.
So he wants to build cash value as well, which I was thinking go with NLG, right?
Yes, I like them.
Okay.
That's what I was going to recommend. But keep on.
So I got 2 illustrations for him because he wants to cover either the whole amount or 75% of that.
Where are you
Right.
located, Emmanuel?
Florida, but I need help on that. That's a big deal.
I'll help you.
Okay.
So here's what we do. He wants, all right, so just so I can get it clear, he wants 800,000,
Right.
but he also wants to have a vehicle where he can kind of grow interest on his money and things like that, right?
Correct.
So he pretty much wants an IUL.
Right.
All right, which is great. That NLG is really good with the IULs because they're one of the few companies that don't take blood and urine. You have to hit a certain amount. And I think is it 2 million? I think it's 2 million. It might be 4, but I'm gonna say 2 to be on the safe side. You can get up to $2 million of life insurance coverage without them taking blood and urine. What does that mean? That means quicker underwriting. That means the client get his policy quicker. That means you get paid quicker. Just
Wow.
really simple. So yeah, we can do an illustration. The way I would do it is when is that appointment?
It's Friday, tomorrow at 5:30.
Okay. All right. So here's what we'll do. We'll connect tomorrow. Me and you will connect tomorrow early.
Okay.
Early in the day. I want to say let's try to connect around 1.
1 o'clock. Okay.
1 o'clock. I'm Eastern. We're both Eastern. So we'll
Right.
connect around 1. And what we'll do is we'll kind of call NLG together because I
Okay.
want to walk you through. I want you to see what it looks like to call NLG and be able to talk to them because guess what? They're going to walk you through this. We're going to walk you through it. We're going to tell them exactly how old the client is, how much coverage he's trying to get, and then we'll look at some scenarios on how it's going to accumulate. They'll create an illustration, and then you'll be able to go to the client house at 5:30 with that illustration in your email to be able to show them exactly what that policy is going to look like once it gets issued. Once he sees the numbers, and I teach you how to read it and teach you how to explain it, which we're going to all do that on the phone within that few minutes that we're on the phone and you get the illustration, I'll teach you that. You're going to go there. He's going to see that illustration. He's going to say, when do I sign up? You're going to say, right now, let me fill out the application. You're going to electronically submit the application through NLG. It should be approved shortly, but not that same day, but probably like a day or 2. And then we'll be moving on to the next one. It's that simple. So
Okay.
for all of you guys who are like, man, this seemed like a hard process. This seemed like a lot to digest. Emmanuel on the next call will be telling you how easy it was.
The only thing is that I have the first app has to be paper, right?
You never written with NLG,
No, never wrote them.
but you do have them, right?
No, I don't have them.
Yeah, it does have to be paper. That's no problem. We'll get you. I'll make sure Genesis get everything over to you by tomorrow, so that way you can have the paper app and everything, and then we can kind of hash out everything that you got to fill out. You got it? She ain't seen your Uber? No. She sent it? All right.
And I also have the 2 illustrations already from them.
Oh, you have 2 illustrations already?
From NLG.
All right, so all we got to do is pretty much look at them, and then I can teach you how to kind of go over it. And if you want, when you go to the house, if you want to just put me on speaker and kind of let me talk a little bit, like I'm asking any questions you're unsure of, we can do that.
Okay.
So that you just say, hey, I'm gonna call my advisor. I just want to get a better explanation and breakdown for you, and I'll get on there and I'll break everything down, answer any uncomfortable questions that you need to get answered, and then you'll just write the paper at, and I'll walk you through that, and we'll submit it and call it a day.
Okay.
Nico had to do that with his first paper at too, and by the time everything was done, we were good.
Okay. Thank you.
No problem, Emmanuel. All right. Anybody else? I don't see any other hands up. All right. If I don't see any other hands up, no one else has any questions, I'm gonna kind of close it there. I don't want to overwhelm these calls with too much jarring, right? because it's really simple. We're just selling the concept. And then you got people like me who've done it before, people like Ab who've done it before, you know what I mean? And then people like Emmanuel who will do it, and he'll be able to give his testimony, and everybody else will be able to do it. Genesis, if you could type my number in the chat, Jacqueline needs my number. So, and everybody who doesn't have it, feel free to take it down, and don't hesitate to reach out. But yeah, I just want to get y'all. I just want to get y'all in the habit of kind of finding the opportunities, just like Emmanuel is doing, just like Sergio is doing. And then we're going to do the rest from there. The best way we're going to learn is on the job training. That's the best thing about this business. You learn as you make money. So I'm going to close it up there. And no other questions. We're going to close the call up there. We'll have Sean Reggiano on the call within next week or the week before coming up. I'll let y'all know in advance once I kind of marry his schedule. And we'll be growing. Next Thursday, Millie Persina is going to be at the BDM in Philadelphia, right here in Ben Selling, right at our office in Building 2. She's a Hall of Fame producer. Agency is doing at least $500,000 monthly. One of the best in the business that I can say of. Her husband is Jonathan Persina, who is the #1 overall agent in the entire company. He did like $1.3 million last year personally off his own pen. So if you guys can make it here, this is somebody you want to learn from. I'll be there. But you definitely want to kind of get around these type of people. So, and I'm gonna try to get her on our call coming up too, and get Jonathan. And I'm gonna try to keep a schedule out for us once I hash everything out. All right. All right, guys, let's kill it. If y'all need anything, you have my number. Don't hesitate to reach out.